What's up, guys? It's July 14th, 2025. Hope you're doing good. Looks like we had a bull channel today. I want to give a quick shout out to the members and subscribers. I appreciate you guys always tuning in. I'll be dropping more members videos this upcoming week. And stay tuned for more live day trading. I'll probably be live trading probably right after this video post. So if you want to see that, come check it out. Yeah, today's going to be a little bit of a quick one. I've been pretty busy. Hope you guys have had a good day. It's Monday. I know some of you guys were talking in Discord and caught a swing, so that's cool. It's always nice to catch a swing on a Monday. Get some cushion for the rest of the week. So we have 3 bars. This is the weekly chart. This is the daily chart. We got 3 bars in a row here. Showing off to get its own second leg. I paused there because I was thinking about what I wanted to say. So we are in a triangle, which is starting to become breakout mode. This is the first pullback after 3 bars, and there's a gap, so we know bears are now trapped at this swing right around here. Gaps happen at support and resistance. Bears obviously want this to be climactic and reversal. Bulls want this to be the first reversal that fails in rallies. After today's price action, it does look like it's failing, but we won't know until the week's over. This could just flip into a bear bar the next couple of days, or big bull bar. Last week's bar is going sideways, so this could eventually turn into a doji as well. Here we are, today's price action, this bar right here. This is last week's price action, which is this doji. Leg 1, pull back with 2, pull back with 3. That puts us into trading range, and that's what we're getting, trading range price action. I had a trade set up right here. I didn't get filled. Bulls were trapped up here. To buy more down here to get out break even. You can see it came right up to my thing and then missed my target. So that's nice. That happened to me twice actually. I took this trade. Look, I had it right here. It didn't get filled. I took this trade. Ended up being a loser. I wasn't here and I had time to get out break even. Then I took this trade. I got filled, stopped out, and it rallied to my target, ended up being a loser. And then, so 2 trades ended up being a loser, and then this trade, and this trade were both winners, but I didn't get filled to the tick. That's kind of frustrating, but that's also part of the game. Okay, back to the daily chart. So we have 3 legs up, and now we're going sideways. The first bear bar ended up being a better fade. Bulls made 1R. Second bar here, second bear bar, is starting to become a better fade, but we won't know until more bars. Bulls want to get back to the high. Bears want this to be the start, the trading range, and then a breakout. There's also a double top here, so bulls that buy here, buy more lower, they get out at break even at their original price, and that can be enough selling pressure. There's a bear spike right here, starting here. It's a very weak bear spike because the follow through was a bull bar, and there's a tail right here. But there is a bear spike. This is going to be a little bit quicker one. I'm going to go over the trap traders and get to streaming. Gap down, bar, small gap down, bar 1, bear bar, bad follow through, bar 3. Excuse me, I forgot how to count, I guess. Bad follow through, bar 2. The bulls that are buying the low here, bulls that buy the high, bar 1, thinking it's a gap down and we're going to rally. They buy the high here. They buy more around the bar 1 low, around the bar 2 low. They make a little bit of money, they're able to get out break even. Bulls are selling, bears are selling, and we get a climactic bar leg 3. Problem now, bears are shorting the leg 3. Bears are shorting bar 3 or shorting bar 4 tail are instantly trapped. They don't have too much time to get out break even. They can short the bar 4 high. They can short right around here, and they do get out break even. When I said they have too much time to get out break even, I mean if you short bar 3, you have like this much time to get out break even. But however, if you're willing to scale in, you do get that break even on bar 6, 7, 8, and 9. That's enough pressure to create a second leg. Leg 1, pull back, leg 2 for the bulls. And then bears are also shorting bar 6 because now bar 6 bears are trapped. And we know that the problem is the bears that shorted bar 6 also had enough time to make money. A quick tick on 7 and like maybe a point on 9. They short higher. It's the first touch of the EMA since yesterday's price action around 77. So about 14 bars, but there's some overlap on 11. Bears are short the low 6, short higher on 13. Their break-even price is here, and they're actually making money. So that lets us know, at least for this price action, we're still in a trading range until we start to get that breakout. Bulls that buy the high of 13 buy more. They're now trapped because 12 sells off. They buy more at 12 and 13's low. Their break-even price is here, but they can hold to the high because they're betting it's a trading range. It's a trading range, big down, big up. Bears made money right here. Bears made money on 12 and 13. So they're making money. Bulls can get out break even, or they can get out right around here. Bears are now trapped on 14. Bears are now trapped on 15. We're starting to have a triangle. It's a trading range right here. Big triangle. This is where this thing starts to get interesting. Bar 16, Bears get short and they're trapped on 17 and 18. Look at 19. There's a tail there, but their break even actually never gets hit. They have to hit out right above the EMA for a small loss. And then then that's also where the breakout started. So Bears are taking a loss now. Instead of getting out break even or making a little bit of money, Bears took a loss. Even if it was for a tick, they took a loss, and that's actually the start of the rally. 2021, 2 bars up after a bear bar, so we know Bears are trapped here. Put that thing right around there. And again, Bears are not making money. They're getting out break even, causing another rally. Bulls are buying all in here. Bears are getting trapped, trying to get out break even. Second leg traders are looking for that pullback to enter the markets. 3 types of traders buying the same area of interest, you could say. 23 and 24, breakout, shot to get second leg up. Problem with 23 and 24 is right under resistance. So Bears at short here, you can get out on the maybe 25 for a loss, a small loss, or a 26 break even. That causes the second leg for 23-24. Now we wait for that second leg dynamic to come back. Bulls that bought the high of 27 are now trapped because the market sold off. They were chasing and it reversed down on them. They're trapped into a losing position. They buy more lower. They could buy around the EMA and they can make a quick point on 32. They sell out of longs, and now Bears get their second leg down. Leg 1, pull back, leg 2. Now we do the same exercise again. 33 through 37, shot to get a second leg. Well, hold on. The appearance looks like it can get a second leg down, but there's lots of tails, and 35 actually is a trend line break. So there's 3 legs down. Leg 1, pull back, leg 2, pull back, leg 3. It's a wedge bottom into support, and it's a trading range, so I can understand why Bears were trapped this. However, 38's an inside bar, which is breakout mode, and it's 3 legs lower, so I think it's okay to get out shorts if you caught that second leg down. Nice. I think a lot of Bears thought this was a double top. It was going to sell off because look, and there's a fresh breakout right here between 38 through 41. Bears that short the 37 low, short more at the 42, 41, 42's high. They don't get out at break even. There's a gap here now, right around the EMA. That's resistance, turn support, and then 43 traps them. So they don't have a lot of time to get out break even. They actually have no time to get out break even. There's no break even. They can either take out for a small loss or take a bigger loss. Market starts to rally for 2 to 3 legs up. Leg 1, pull back, leg 2, pull back, leg 3, and then look again. Just how we read the weekly chart, reading the daily, or just how we read the weekly chart, we can read the 5-minute chart. Or daily, yeah. So 3 legs up, leg 1, pull back, leg 2, pull back, leg 3, sideways price action. Price action is fractal. It's really important we understand that. Leg 1, pull back, leg 2, pull back, leg 3, sideways price action. Bulls get the breakout. Leg 1, pull back, leg 2, pull back, leg 3, sideways price action. Bulls try and get the breakout, but it ends up selling off. Now what's interesting about this is there's a leg 1, pull back, leg 2, pull back, 3. 59, 60, 61. Looks strong for a second leg. It's really nice looking bars, but it's late in the day, and we started out with a couple of big bear bars, so we know Bears are trapped. These bears are going to be some bears are just going to keep averaging in until they can catch the drop off, maybe tomorrow or something. Or I was looking at the overnight session. So the institutions, they're not going to get out for a small loss. They're just going to short here, short, short. And now all the institutions are making money on the way down. And then the buying institutions, they're going to be buying these bars, 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 and front running to get that rally. That's how you build a position. That's how institutions build positions. And that's why we talk about trap traders, because they're averaging in and whatnot. Trap traders, when traders get trapped in one direction, that's what makes the market go flush in one way or the other. 3 bars here, shot to get second leg, but then there's a problem. We're 3 legs higher, trading range behavior. So the bulls that bought here, they can buy more. They actually can't really. They'd have to buy more. To try and buy some here, they're going to get stopped out if their stop is 1 tick below bar 59. Bulls that bought here are going to have to buy way lower. This is dangerous, but they do get their break even on 72, and it sells off for that second leg down because bulls are selling out of longs. All right, guys, today was a quick one. Stay tuned. Probably going to do like a short stream later tonight. I'm going to grab a quick bite to eat, and I'll talk to you guys tomorrow. Thank you for your time. If you learned something, share a show. Don't be a hoe. Thank you, everyone. Bye.